One of the values that I hold really dear just as a person is helping other people. So I wanted to make a video today that would help people by talking about some of the common mistakes that traders make and then how to overcome those mistakes because they're not so hard to overcome, really. It just takes a little bit of slowing down and looking at what you're doing, reflecting, and then making a better plan. Okay, so here we go. Some of the common mistakes that I see people making are, number one is revenge trading. Revenge trading is very popular and common with aggressive traders, okay? Number two, asking AI for trades. This is new. I'm just starting to hear about this, and it's fascinating to me that people do this. I think AI is a very valuable tool. I just don't think it's ready for trading yet, unless you have your own company that you've hired, or you are somebody who knows how to program AI into taking trades that you've already researched and done back testing on. Okay. Number three, overtrading and undertrading. These are two common things that mistakes that traders make. Number four, bad allocation. So just not even thinking about what your allocation should be in your options portfolio. And when I talk about allocation, I'm talking about two different things: bad allocation on stock picks, that you haven't gone through that mentally, or bad allocation with the types of trades you're taking and how those are stacked in your account. Like you may be too much in on credit spreads and not enough in on share ownership, for example. And then number five is bad stock picks. I put that last because I harp on about that all the time, guys. So I put it last. You can skip that if you've already heard it from me before, but if you're new to this channel, that would be number one. That would be the biggest mistake that people make, but it's the last thing I'm going to talk about because I have talked about it so much on this channel already, and I don't want to be repetitive to those people who are here a lot. All right, so revenge trading, where does it come from? So we have to think about where it comes from in order to find the solution. So you got to look at the root of the problem before you can kill the weed that's up above the ground, okay? So we have to think about trading and what it does for us. What it does is a lot of times it can give us feelings, big feelings, and those feelings can often show up as euphoria, just extreme pleasure with things going great. You can also get a lot of self-doubt and doom and gloom feelings when things are not going great. And then you feel like, oh, I've totally got this when things are going, just average. And you're making the kinds of returns that you expect, okay? So when things are going great, we feel euphoria. And this is like really the opposite of greed, but it is sort of where greed comes from. It's a weird dichotomy. So you have to understand a lot about human nature, and it's absolutely worth understanding human nature and your own nature to be able to master your trading. So euphoria can mask itself in all of these other feelings. So when we're experiencing euphoria from like really having great gains or a trade really took off, we feel so intelligent. It was so easy. We're clicking buttons and we're outsmarting everyone else who is working hard right now. Like it can feel like that. We can just be like, hey, I'm outsmarting everybody else. And, we are as options traders, that's a clear thing, but we shouldn't have an ego about it. We should be ego-less, okay? So oftentimes when we're experiencing this euphoria, we don't realize that actually what's happening is that we are not insanely smart. The market is just simply moving in a direction that we like. Our job is not to allow that success to fill us with overconfidence and ego, okay? And when we're down our accounts, we feel smart still, and sometimes we even feel dumb, and we think that we can outsmart the market or pattern. The low feels bad, so we often rush to do something we see as positive in that moment to feel better. And that's a trap. Okay, so what we need to do is we need to avoid the emotional highs and lows, and we need to approach trading calmly with poise. I really like that word. Someone taught me that word. I love this word, okay? So revenge trading It's a personality type, okay? There are some traders who will never experience revenge trading because they're naturally conservative. But that doesn't mean that the naturally conservative people don't have their own problems to deal with. They do, and we're going to get into that later. Okay, but revenge trading is a pattern, and it is a pattern. If you revenge trade, there's a pattern of this in your account, and there's a pattern of it in your life, okay? So it shows up in traders who are aggressive, confident, and like to move fast. How do we overcome it? So I like the idea of pretending that we are someone else, like an archetype. And when we hit a moment like this, where we get into the pattern of revenge trading, I like the idea of like pretending or taking on the persona that I'm like an admired judge, and an honorable judge, and I'm hearing the case from both sides and considering the evidence, and then calmly and firmly giving myself the verdict, or giving the case a verdict. So if I think about that, revenge trading is taking a trade, the trade goes bad, then taking another trade immediately to try to like win back those losses, because I gotta move fast. I gotta do that right away if I'm revenge trading. Okay, we don't want to do that. That's what revenge trading is, okay? So how do we overcome revenge trading? Number one is you have poise, okay? And I want you to think about poise now and have some deep thoughts on it, like that Saturday night thing, like deep thoughts by whatever. Think about poise. No, seriously. Pause this video after I'm done saying this and think about what that word means. It means that we aren't bothered, we aren't flustered, we are unaffected by the world around us. The world is like crumbling, the world is exploding with joy, and we're just going like, okay, I see this, I'm taking it in. I'm not emotionally reacting to this. So we are unaffected, we are calm, we're in control of what we do next, and we know that the choices we make will be wise if we are standing in the position of having poise. Does that make sense? So like you're out of poise if you're just reacting really quickly. Speed is not poise. Doing things calm, collected, the right way with perfection is poise, okay? Like really taking the time to make a beautiful painting is poise. Whipping something up in AI is not poise. You got it? Okay, so I like the other thing that I like for this to overcome revenge trading is I like the idea of pretending we are somebody else, like an archetype, when we hit a moment like this. And again, I like to be that person that's a judge, okay? So I like Judge Judy for the attitude of this, as far as like, she takes no BS, right? Like she hears both sides and she's just like, I'm unimpressed with what you're dishing out here. Like, let me hear all this and then I'll make a decision. Now, I don't like Judge Judy in the eye rolling way, okay? But I like it that when she says what she has to say, she's considered everything and she's like, this is the way that it is. Done. That's the way that it is, okay? And that's poise, okay? That is poise. It's direct. It might be a little bit brash version of poise, but it still is. Okay, so I'm going to give you an example of revenge trading. And this is the first example that I'm going to give you. So here's an obvious revenge trade. So we set up a call credit spread. We lose on it. And then we're like, you know what I'm going to do immediately? I'm going to set up a put credit spread to get my money back instantly from the opposite side. Okay. So in this scenario, the trader is solely reacting to emotions and the desire to make money that they lost quickly. Okay. I want you to be aware of any feeling that urges you to move quickly, because that's a bad signal. Fast is bad. Fast is always bad in trading. As far as options go, like, I mean, for sure, if you see something go up and you're making a profit, yeah, take your profits quickly. Setting up a trade really, really fast, because you're reacting to a huge market move. I mean, like, dial it back a little bit. Those opportunities are still there 2 minutes later if you put some thought into it, okay? So poise is not fast. Poise is measured. Poise takes its time and moves when it's the right time. It moves when it has considered all the ins and outs because it is wise. Poise is wise. Okay. All right. Here's another trait. Okay, so let's just see. I got to actually read what I'm thinking about to myself. So, a second way to overcome this revenge trading thing is think to yourself, what is the opposite of what a revenge trader would do here? Okay. What they would do is they would wait for better conditions to emerge on that same stock, or simply accept the loss here and see if any other A plus setups exist in the market. And if they don't, they're done trading today. And we might even be done tomorrow. We're just waiting for the right time until that comes because we're having poise. So poise is patient. Poise knows we can react later, and that money comes when the conditions are right to make money. Poise is mature. Poise is old money. Okay, so like, do you know any of these people who have just been rich for generations? They don't like hop on a deal in 2 minutes. They just don't do that. They have their lawyers consider it. They talk amongst their friends who are other wealthy people. They hire advisors and consultants to see if like an incoming deal is a good idea for them. They don't just jump like that. They simply just do not do that. So poise knows that it's going to happen, that they're going to make money. It's simply a matter of when. That's another thing old money does. So old money is wise. It doesn't move fast. It goes like, I know that I am wealthy and I know that I have the ability to make more money, but I'm going to wait till the conditions are correct. And I'm advised by people who know better, or the strategy is telling me so, that all systems are go for me to go. Otherwise, I'm not going. Okay. I'm not jumping on this. Okay. So here's an example of another thing about revenge trading that I see people do. I have a friend who was doing this, and I had to actually like pull him aside and just be like, what are you doing right now? I'm listening to you. You're spinning out of control. Stop. Like, hear me out on this. Okay. So here's the example. You're trading XYZ stock and you lose on it. And I'm really not referring to block here, but I'm just using some letters. Okay. There's often a desire to get the losses back from that exact same stock. I've seen this so many times. Like, I've lost on this stock and I need that same stock to give me my better money back. Mentally here, the person is having to dominate something they found that they couldn't control, and they still haven't figured it out that they can't control it in the future. This behavior is stubborn, immature, and really hurts the account. So I just don't want to see anybody do it. Okay. And as I'm talking through this, guys, I don't want you to think that I'm like above all of this, that I've never done any of these things. Of course I have done these things. Actually, the reason that I am telling you not to is because I've been through these things. And this is where I've made mistakes. And this is where I see other people make mistakes. I am quite, what's the word? I'm quite reflective from like my spiritual beliefs and stuff like that. I am quite reflective. I take the time to reflect on my actions and see if there was a better course of action. That is something that I do very consistently. I also have a lot of discipline. I've always been fairly disciplined throughout my life. And I do believe that I have a lot to share about discipline. And I do also think discipline can be learned. It can be learned. So I saw somebody in the comment the other day saying to me, I mean, Erica has a lot of discipline, so it's no wonder she can do this, but most people don't. I'm like, it's not like discipline is eluding anyone. It's not something that you can't cultivate within yourself. Of course you can. You can do that. That's something you just got to put some effort into. No big deal. You got this. Okay. So revenge trading number 2, how to overcome it. Ask which stocks are working for you. You must do the work of trading stocks to see which stocks suit your personality more than others. Dig in to stocks that move more the way that you like most of the time, and look for other stocks that are similar to that stock. Okay, like if you need a new stock because you're like 60% in on the stock and that makes you nervous, and you're really successful at trading that, but you're like, I don't like that allocation because it's too heavy in on this stock if it starts to get bad news or something, then look in the market for other stocks that are similar, trade in a similar way. So ditch the stocks that move too fast or too slow for your personality, or where the CEO says crazy stuff to tank your moves. Make it easy on yourself. Avoid the desire to make this hard and dominate. Domination is an illusion. Things do not move the way that we want to because we try to force them. We are really so small as retail traders in this market. We're insignificant. You got to know your place in the school of fish, and you are a minnow among sharks. Okay, so just remember. Also, think deeply here. If you attack stocks like this, do you act out this way in any other area of your life? My guess is that you do. Get some coaching on that. It will transfer over to your trading. So like if you have this explosive like thing where you're going, I lost in this stock, so I have to get it back from this stock. At the same time, I mean, first of all, you're reacting with a ton of energy, and that energy is negative right away. So are you quick to sort of like fire off at your kid when they do something wrong and not just take a step back and be like, he's a teenager. Teenagers do stuff like this. I just got to talk calmly to him about like, hey, there might have been a better choice that you could make. What do you think it was? That's better parenting, is it not? Then just be like, what were you thinking? You can't make mistakes like that. One is going to help your kid learn. The other is just going to push your kid away from you. Sorry. All right. So like, that's what you got to do. That's what you got to do here. Okay. So domination is an illusion. You can't dominate those stocks. You cannot make them do what you want them to do. And the idea of going out to try to get money back from a stock that hurt you previously, it's really immature. And you need to just look for other A+ setups. Walk away from that stock. That stock isn't your friend right now. Okay. And don't chase something that is running away from you. That's another one of my rules out there. Okay. Next mistake I see people making is asking AI for trades. So this is like a new phenomenon I'm hearing about, and I'm blown away when I hear traders say they'll ask ChatGPT for a trade, and they'll be like, yeah, and ChatGPT figured out what the upside and the downside was for me on this trade, so then I took it. And sometimes this can work out for a long period in time, and they're doing great, and then one time it didn't work, and that one time like blew out their account, or at least erase the profits they had gotten on the previous trades. So remember, guys, that ChatGPT is giving us data on probabilities, and that's all it knows how to do. Okay? It doesn't consider seasonality, risk reward, or whether it could blow up your account if it goes wrong, or how to get you out of that trade in a way that makes sense for your longer term goals. Okay? AI has a strategy just for that trade, maybe. But that doesn't mean it's a safe strategy or that the risk reward is something that you're comfortable with. So, I mean, I've asked ChatGPT, give me a definition of theta, and it's been spot on. Okay. I've said, hey, how does a covered call on Apple work? It gives me a good explanation. Would I take its advice on what strike price to sell on an Apple call? No, never. Because it doesn't know what I want to get out of the trade. I mean, if you just want to get some premium here or there, sure, take their advice. Fine, whatever. But that doesn't mean that there isn't a better trade you could have taken. For sure there is. So I just want to say, guys, stop making it so easy for hedge funds to take your money. Seriously, just stop. Get a real education. There are no shortcuts in this. And the options textbooks and the AI outputs are telling you how to trade this in a textbook way. But you absolutely will not make as much money trading options in a textbook way. You will make more money trading options in an out-of-the-box thinking way. And they're never going to give you that there. Okay, that comes from mentorship and real life experience. And experience. Okay, with somebody alongside of you that you could ask questions from. I really do think that's the best way to go. Okay, undertrading is another problem that I see people run into. And the one that's come up for me recently as I've been interviewing traders to join my program is giving up. So undertrading is when you don't trade enough. Okay. And that's all relative, right? It's relative. But the one area, there are some like red flags on undertrading where I see that and I go, okay, but I don't understand why you're doing this. So one of them is giving up. So I see people simply give up selling covered calls and premiums get smaller. And remember how I said earlier that conservative traders make mistakes too? Well, this is the big one. They give up and they stop trading when the market gets tough because they think, they don't really have the confidence in themselves to trade in a down market. And that's sad because they can go out and get an education in it. And the other thing that they can do is they can actually trade it to get experience. Okay. So that's a little bit of a sad moment for me because it's a huge, huge like learning opportunity that they're missing out on. Okay. So the breakthroughs in trading don't come from when everything is going great. They come from when things are not going great. So the idea of giving up then to me, or just stopping trading then and taking a break, oh my gosh, it's just like you're costing yourself so much. Okay, so a lot of people stop trading when the market dies, and this is a huge mistake. So you need to understand what the smaller premiums can do for you in your trading plan. Okay. I talk to a lot of people who want to make this into their lifestyle, options trading for a lifestyle, or options trading to pay for something like a second home, or to pay their car payment or whatever. Okay. So this market dive that you would be in that would stop you from trading isn't the end game. This is the moment when you're down 15 points in the Super Bowl in like the fourth quarter and you have to make a comeback. The alternative is what, guys, here? Walking off the field and forfeiting the game to come back next year? Like, what would you think of a team that was doing that? You would be like, what? This is unheard of. Why would you do that? So you're going to do that to yourself? Or even worse, you're going to do that to your future? Just give up like that? I mean, I understand that you're like maybe don't have the confidence to go forward and place certain trades because you think you're putting your account at more risk, but selling your covered calls to continue to collect premium, or if you're running the wheel, guys, you got to stay in the game running the wheel. If you chose to run the wheel and you get assigned on your puts and you're not selling far out of the money covered calls to collect some amount of premium on those puts that assign with you. One, you're leaving money on the table. Two, you have to see how long it's going to take for your account to turn green or for those trades to turn green. It's going to inform you if you need to add more trades to get your game plan in place so that you can make your dreams come true through options. Here's where you make the big discoveries of you just simply maybe don't have a big enough account to do that right now before you thought you did. Or you need to learn more trades because these trades, the wheel isn't going to cut it for you. Okay. And I don't know how you're going to understand that unless you trade it. Okay. Or one of the insights that I got that I shared on my journey video is that when I traded a down market, I made 30% less that year than I had made the previous year. And that informed me on how big my account size needed to be in the future for me to make this into my solo career. And that information was invaluable. If I had just given up, then I would still not know what my plan needed to be. I wouldn't be able to develop my plan. So I'm a planner. And so this type of information is invaluable to me. I don't know how it isn't invaluable to everyone. Okay. Undertrading. So resistance to executing new trades. The other way people undertrade is they don't learn more trades when the market is good. Okay. So you need to learn and practice new trades when the market is good. Why? Because when the market sucks, you don't want to have to be in the pressure of acting when you're already in the bit of a fear headspace. Okay, so fear is natural, fear is normal. We have to do a lot to overcome fear to be great traders, but I'm just telling you, it's far easier to practice some of these trades that would work in a down market when the market is up, because then you're not going like, oh my gosh, I'm learning at the same time that my account is dropping, and it's two uncomfortable feelings at once. And don't you want to avoid that? So I use the analogy of the military here. The military is training all the time for wars that never come. Okay. They don't start training once the war has already started. So you got to train yourself when the seas are calm, so that when they're rough, you have experience going into those stormy seas. Just logical, right? Okay, and then the last thing is undertrading is resistance to learning. Okay, so undertrading is when traders don't grow by learning more trades. I see this. I see where people get so used to running the wheel, and then when the market drops, they say it doesn't work during an extended pullback, and it does work. It just doesn't work as well, and you're finding that out. That's all. The trade itself is neutral. It has upsides and it has downsides. What happened was that you thought it would yield you the same premiums throughout all cycles, but you're finding that that didn't work out as planned. The reality is it's working exactly as it should and exactly as it is supposed to in those market conditions. You just wanted it to have better results. You didn't realize that it had limitations, and to reach your goals, you're going to have to go back to school for more lessons to get where you want to be. That's the reality that you're in, okay? So remember the data. So remember that the data of how much a strategy can make you is always right in front of you. Options have defined risks. They have defined wins and gains. They really are. But you didn't think to look for it because you never thought a stock would dip that hard. You were in denial that it would ever happen. It's okay. It's okay. It's okay that happened. But now you got to course correct, okay? So learning new strategy saves the day and the account here. Okay? So again, all of these things are risk defined. And if you went in and did the math of what's the worst that could happen, the math was always right in front of you. You just didn't dig in to learn that. Okay. No problem. No problem. To look at it even. It's not even that you didn't learn it. You didn't look at it. And that's fine. That's totally fine. But now you're in the pullback. Keep doing the wheel so it can show you, or stay in the wheel positions you're in, rather. I'm not saying keep doing it, but stay in the positions you're in and see how fast it takes you to turn green or how slow. That's going to really inform you as to, hey, when I make a not great stock pick, this is what happens. It's just not profitable anymore. Or there are other strategies that could be more profitable. All right, now we're going to get into the overtrading problem that people run into. So guys, we're going to go back to these euphoric feelings, right? So making money by clicking a button is euphoric. In fact, I think we're all a little bit detached that the money that we're making in our accounts is real. It can feel like a video game almost, where you're just like, okay, that percentage is up, this percentage is down, click $300 into the account, amazing. It can feel like the statement of seeing, when you see your statement or you log into your account and you've got 350K in there, it can sort of start to feel like that's not a lot of money when really it's quite a bit of money, okay? Anyway, overtrading is getting out of the touch with the fact that the money is real. It's real money and it has real possibilities and real responsibilities attached to it. Okay. So overtrading is a symptom of thinking that the easy times will never end and that you got this. It's so easy. Like you're thinking that in your head, you go like, I got this. It's so easy. It's overspending on margin. It's trading on margin when you don't have a solid months or years long history of being able to significantly beat margin. Guys, I've been known to overtrade. I'm not immune from any of this stuff. We are all battling our personality faults here to become better traders. And what I would say is get to know yourself, spend some time examining yourself, and put up some ground rules when you're not in the heat of the moment trading. Make the ground rules today, like now. Do it now. You could do it right after this video. You could pause it and come back here. I would even prefer that, okay? So overtrading solutions go a little bit like this. You make up rules for yourself. You say okay, I'm only going to use 30% of my available collateral. That's my rule. After I get there, I have to stop and I have to log out of my brokerage account that day, okay? Or I'm only going to use 50% of my available margin. Or I'm not going to use margin at all until I have a 30% gain on my account for one solid year, and also know some great strategies for how to trade bear markets, et cetera, et cetera, et cetera. You got to make up your own rules. You got to see what is the thing that keeps bugging you? What is the thing that keeps jumping out to stop you or is limiting you or is a consistently repeating pattern for you, a problem? A problem pattern that is emerging. What rule could you make to counteract that? You got to do that work. If you need help with that, I could help you with that. All right. So bad trading allocation. Bad allocation is having 50% of your account in calls, that you bought, that you're on stocks, 10% in covered calls, and 40% on spreads. This is a high risk trading allocation. This is a really high risk portfolio. It's not thought out. It's not sustainable through a major downturn or drawdown. And you're just begging for hedge funds to come and take your money, which I hate to see. Okay. So you may as well just write them a check and not go through the pain of seeing it all happen in front of your eyes over the months and years and go through that pain. Just like write them a check instead. It would be better. Write a check to a charity. I even feel better about that than you having such a bad allocation because you're going to lose your money. And you might not lose your money for years. You might do great for years. And then just 1 year at all, just, okay. So what would have happened to me in 2022 if I was mostly in leaps? That would have been bad. So that's why I didn't do that. Okay, so the same can be said for having all of your trades in the wheel. It's not getting you as much as other trades could. You're doing it because it's easy, but you're costing yourself results because you don't want to apply yourself and learn a little more, okay? Like that's what you're doing. Like make it make sense, guys. I would just want to make this make sense to you. Okay, so bad trading allocation solutions. Cultivating a good allocation will take time. If most of your money isn't in shares, you have a problem. Money in shares is essential. The covered call can keep printing money, even if it's not as much money, okay? It's humble, and the premiums are sometimes small, sometimes they're huge. But what it does, it offers you some measure of stability. It gives you some amount of cash flow. It offers more cash flow than having your money in mutual funds when the market's down. Try that one on. There's no one who can disprove that. It's simply not true. Okay. Money in shares is able to give you money when the market is down. Mutual funds are not. Okay. Shares never expire worthless. Options do. So yes, owning gobs of leaps is great when the market is ripping, but we're living in a world where one tweet can smash our dreams. Let's not let that happen because it can happen. Okay, so let's just not let that happen. That's gambling, okay? So bad allocation solutions. So if you're only trading the wheel, I'm just going to give you some thoughts here. Have you ever thought about trading put credit spreads instead of the put? Because that would give you downside protection. So that's like a more responsible way to do it. It's just taking better care of your money, okay? When you see your favorite stock rip past your covered call strike price, wouldn't owning a few leaps here be life-changing? It would, okay? So learn that stuff. Figure out how to integrate it into your game, okay? Bad stock picks. We're going on to the thing that I harp on about all the time. I sound like a broken record. Or maybe, again, a bad parent that says just like, do not do this over and over and over again. Okay. So I do this because I have so many students that are thrilled with the results when I ask them to reflect on what helped them the most from my program. And the biggest aha moment was that they realized they needed better stock picks. Even when I interview people, I'm just sitting there and I tell them on the phone, I'm like, your problem is that you just need better stocks picks. And I don't give them stock picks. That would be illegal for me to do so. But I am just saying, I say, everything would change for you if you just had better stock picks. So, yeah. So my course simplifies options theory so that everyone can understand it. I really take out a lot of the fancy words and the new vocabulary, and I introduce you to that options vocabulary over like a short period of time, and you come to understand it. So I also cut out a lot of the stuff about Greeks that we don't need to understand, because understanding them doesn't make us more money. It's nice to know, but it's not at all necessary to know to make money. So once my traders get an education, it instantly clicks that you need great stock picks, because I cut out all of the extra stuff we don't need to know because it doesn't make us money, and explain to you the stuff you really do need to know to make money. And what you see is that a system emerges where you go like, oh my gosh, it is so clear to me that I need to make great stock picks. I see what she's saying. And I guess my point is that you can take my course, and maybe figure out on, you can take my course and you can pay me thousands of dollars for me to say to you on the course, here's why you need good stock picks, because you see how all these trades work? That works only great with great stock picks. But I just want to make it abundantly clear to you right now that you can also just believe it from this video, and you can make better stock picks and start making better money right now. If I'm talking to you, if you already have great stock picks, I'm sure you're enjoying the fruits of your labor of making great life choices. So congrats. Okay. So we'll see. But anyway, I'd be happy to have you join my course, but you just might be able to avoid it if you simply start trading the best stocks. It'll work. I know it will. I'm like living proof of that. Okay, so you guys, if you want to hear my journey, a video about my journey on how I became work optional with options, I'm going to link that in the description because it was a fun video for me to make. Okay, so. The other thing too is that if you want a bad stocks fix, okay, and you want to know how to trade the best, okay, I will link you to another series of videos on how to make great stock picks. So you want to choose stocks with rising 5-year, 1-year, and 3-month charts. You want to choose stocks with rising revenue and profits for 4 years in a row. You can find that really easily by logging onto Yahoo Finance and clicking the Financials tab. You want to choose monopolies or the companies that are absolutely the best in their industry. And bonus if it pays a dividend, especially if you are looking for stability in that portfolio of yours.